My name is Vlad Karpel. I'm still founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market conditions and answer any questions you might have. For those of you who are new, welcome. This is my brief bio. Always spend time in technology. I have a master's degree in computer science. My thesis was on artificial intelligence. I've been doing that for over 25 years. I worked as executive in several fintech startups here in the broker-dealer side and hedge funds. Building analytics, building technology, building operating systems for financial firms. I've been doing it for over 15 years. Started Tradespoon in 2012, so it's been 14 years. Sharing my experience building technology. We have signals, we have AI models, team of financial engineers that are constantly enhancing these models, and we're sharing with our subscribers to find signals in the market. And then Keith Harwood from Options Hotline joined about 2 years ago, and he provides perspective of a trader. He worked for over 20 years on the exchange, started his career in the exchange, worked for hedge funds, has a deep knowledge of futures, options market. So two of us are managing our portfolio, backtesting signals, and not only creating the signals or the systems, but also trading them in our live trading room environment every day. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education information purposes only. Right, before we jump into a trading plan, let's talk about current market conditions. Some of you were in the live trading room. Patrick, I appreciate you coming back. That means a lot to me. Thank you. Right. 10-year yield continue to make new highs. Right. Let's look at the weekly chart where each candlestick is 1 week. You have 10-year yield continue to make new high. It broke through this downtrend. That's bearish for the market, right? On the fear of that higher for longer, right? Higher energy prices for longer. No rate cuts, right? And that this energy crisis will spill over into the mainstream, right? Already trucks are not moving the cargo because it cuts into their margins, and that could spill over into food prices and traveling and et cetera, et cetera. So 10-year yield is high. That's a good barometer of the current market conditions. 430 has been a very strong support that goes back through the last bear market, last recession of October 22, at least earnings recession. As long as we're above that level, I would be concerned about the market, and there's more room to the downside. Once interest rate reverses and drops below 425, 420, I would say, okay, maybe this is the bottom or close to the bottom. It makes sense to start getting a little bit more aggressive. Until then, flattening of the yield curve, 30-year, same. 30 years already at 25, 26, 23 high. Dollar is at 100. I mean, we did have a rally. It's not making new highs. I think that's positive, but it's also slightly elevated. But it's not making new high. That is good. VIX is at 30. So historical average is 20. We're above. So high level of uncertainty. Market participants do not like uncertainty. The longer the uncertainty, right? We already spent 4 weeks at the 30 level on volatility. You could have this high kind of capitulation, right? That increases the probability of capitulation, like we had in April, where everybody was just selling, and like we had yesterday, AMAT was down 10%. Some of Meta was down 8%. Right, so we're already seeing some signs of dislocations, but I would say, no disorderly moves, kind of orderly moves. So for now, I don't think there's a capitulation like we had in April of 25, or we had in April of 24. Right, where is April of 24? Yeah, April of 24 we were, elevated. No, April 22 was recession, but April of 20, right, the COVID, right? So I wouldn't say that this is, where some people argue that we do see signs of capitulation, like in crude oil, right? Kind of this disorderly sell-off at 120, now stabilizing, right? The oil prices are not going higher. So, I mean, we'll see, right? Everybody have their own biases, right? And you can argue both ways and just have to decide which way you want to, how much risk you want to take in the market. So VIX is elevated at 30. Value stocks are not making new lows. That's positive. So majority of the stocks that pay dividend, your banks, your industrials, they're not under, as a whole group, value stocks are not making a low, which is positive. And they're still in strong uptrend. I wouldn't, this is just a healthy consolidation, pause in the market. We don't see a push to the downside. Same thing in RSP, slightly new lows and sitting exactly at that 24 high. So a lot of support in equal weighted S&P, right? And the bulls do not want to take that level out, right? That would be bearish. Most of the sell-off now, technology has been outperforming value stocks beginning of this year, like maybe February, January. It didn't pull back, but now they're leading the pullback, right? The QQQ is leading the pullback. And took out the November, October lows, and basically putting this whole bull market in technology in jeopardy, right? From long-term perspective, you can see if you connect the dots from the bottom of last recession of 22, right? All the peaks and troughs, right? We already took it out once in during Liberation Day in last year in April. Right, and now we kind of, if you look at this thing here, but we're taking it out again. I mean, a lot of people got surprised by how resilient the market was and that we were able to get back to this uptrend. But nonetheless, we're back below that level again. And the next level of support, just like an equal weighted S&P, right? If you look at the equal weighted S&P, it's already at 5, at this level. QQQ could be at the January of 25 level, right? So it opens the door to 540, right? So if we get to the 540 level, which is another 5%, what, 5% roughly? Yeah, let's call it 5%, another 5% to the downside, which would mean that QQQ is down 15%, right? Which is not a lot, right? In any bull market, 15% correction is not a lot. In April, we were down 25%. So technology, high beta stocks are vulnerable for further pullbacks. Semiconductors are sitting on the important support, right? This was the October high, January low of 26. So it's sitting at this threshold. If we take out these levels, right? If NVIDIA is going to break down below 170 level, where it is now, then semiconductor sector could also accelerate the pullback, right? We're sitting at this important level for the entire group and NVIDIA as a leader of that group. Bitcoin is not making new lows. That's positive, I think, because you would think that, the weakest sector is Bitcoin, already down, give up 50% of its gains. So it's not making lows. That's positive. Copper has a good week. That's also positive, right? That the copper is not selling off indiscriminately. So signs of recession, right? That this is not a recessionary trade that, like in 22, people are concerned about recession and small caps were leading the market. This is a fear of oil stagflation and could be argued that it's temporary, right? Because small caps are actually not taking out just like value stocks, they're sitting at this important level. So I would watch those levels. If the value stocks break through these 24 highs and the small caps break through the 24 highs, then I think sell-off across the board will accelerate as well. Regional banks, same price pattern, they're not making new lows. If you look at the model, Stock Forecast Toolbox in the live trading room, I was covering the model, Stock Forecast Toolbox. I think my model is doing a good job, gives you kind of expectation. For the next 10 days, we're turning negative. We're neutral as long as the SPX and QQQ were holding the levels. Now that we broke through those levels, model basically tells you that if you see 630, 620 print in the next 2 weeks, don't be surprised, right? That is totally possible, right? And unless there is I was given an analogy of image of a knight in a shiny armor, right? You need some positive news for the bulls to kind of give you an idea that this is, probably coming to an end. I'm not going to say who that person is. Most of you already know. But something positive has to happen, right? And it can't be just, oh, we're making progress in negotiations, or we're not making progress. Something tangible, right? Something that people can hold on to with the hope that there'll be a de-escalation in the Middle East, right? Until then, it's hard to say this is the bottom or we're close to the bottom. So that's the stock forecast toolbox. If you zoom out using our model, which you can use for other ETFs or other stocks, you can type in anything. Basically, if you zoom out to 6 months, this was done on March 1st, right? Updated once every month. Basically says 626 to 694. The good news, if we don't break 630 by Monday or Tuesday, which we should not, the good news is that it doesn't see a lot of momentum below that level. So that is positive. We didn't make new lows this month. We didn't break out our predictions. So that is something you can hold on to. You can say, okay, 620, 630, I think is a good opportunity to go long, right? Assuming the knight in shining armor will arrive soon and the market will rebound. Because from the technical perspective, we didn't take out the lows. So 626, 39, 40, these are good support levels. But nonetheless, it still shows that we're not in oversold levels, right? We're at what, SPY 640, 645. Last time I checked, 640. We took out the 640. Okay, so we are at 640, right? Not that far from 630. So that's our model. If you look at the bar chart data for SPX, we're already at 6,400, right? So we're testing the 6,400, right? Nobody wants to be long the market going into the weekend, so we're at 6,400. And there's not much position up until 6,000 level, right? So you could argue that, we're already close to 6,200. 2-3% could happen actually Monday or Tuesday. We do have a quarterly rebalancing, so we could get to 6,200, 6,300. But the biggest position is at 6,000, right? So I think until the night, if the night does not arrive in a shiny armor, doesn't arrive in the next 10 days, because that's the pause, right? Trump said, Iran has 10 days to make up their mind. So if they don't make up their mind in 10 days, and we actually do bomb the energy infrastructure in Iran, then 6,000 would not be that, that unattainable level as well. So the point is, you want to be long and short the market at the same time. Right now, it would be market neutral or slightly bearish because the major levels are taken out. Market is oversold, so you could have these 2-3% rally very quickly. All you need is just one true social post that says we're getting close, right? The market could be up 3%. But until we actually get something on the paper, something tangible that investors can hold on to, 6,000 is not off the table, right? So let's go through these exercises. We do them every day. They're important because you want to kind of decide how much risk you want to take in the market, how much cash do you want to have. So April 17th, let's just, you can't predict what's going to happen tomorrow. But, April 17th, that's the largest position, right, in terms of gamma exposure. Option contracts, $30 billion just in April. So based on the current volatility in the market, one standard deviation to the downside, right? We could be at that 6,000, 6,100. right? So scenario number one, we're trading somewhere in here, right, between 6,100 and 6,700, right? And then scenario number three, we reach an agreement with Iran, or we take over Iran, right? And then oil prices will go down. So scenario number one, we reach an agreement with Iran somehow, right? Some peaceful resolution, or not peaceful, right? We're deploying potentially another 10,000 Marines into the region, right? And we already have 10,000 or somewhere in there. And, we can reach an agreement with Iran, and, Trump wants to leave a legacy that he created everlasting peace in the Middle East. So scenario number one, not through the war, right? Through the war is going to take longer. But he reached an agreement. Iran capitulated, right? They said, we're going to create nuclear bombs. We're going to let the ships go to Strait of Hormuz without paying, a penalty or tariffs. And then scenario number one, right? We're at 6,800, 6,900. Scenario number two, just like probability of one standard deviation, right? Trading is about standard deviation, right? We're trading on the good news, we're at 66, 6,700. On the bad news, we're at 6,200, 6,100. And scenario number one, we take out 6,000, right? We take out 6,000 because, the only way it would happen, I think, is not the only way, but kind of a black swan event, right? Which would be 10,000 Marines go into Iran and create a demilitarized zone so ships can go through the Strait of Hormuz, right? It's not a simple operation. It'll take a few months, a lot of casualties. Nobody wants that. But if it happens, then you could have scenario number three. So why is this exercise important? Because, again, you want to decide how much risk you want to take in the market, how many bullish positions you have, how many bearish positions you have. And those are the three scenarios possible. So how many of you say we have scenario number one, right? We're going to reach an agreement with Iran in the next 10 days, and oil prices will drop, and market earnings season will start. S&P 500 companies are still printing cash, growing in double digits, their revenue, and we have scenario number one. How many of you say scenario number two, we kick the can down the road? In the next 10 days, we can really reach an agreement with Iran, and Trump is going to say, well, we're going to give him another 20 days, right? So scenario number two. And scenario number three, troops on the ground, we're taking over the island in Arabian Sea and potentially demilitarized zone in Iran, and, scenario number three, BJ2. All right. Anyone else? I do go with two. Yeah. I don't know if it's going to be 6,100, 6,200, or 6,000, but because of such a large gamma at 6,000, I think this level will hold. Maybe a little bit lower, maybe a little bit higher. That depends on timing and sequence of events. But I am going to go with two, right? I'm going to go with two. But, we took out 6,500, right? 50% retracement between all-time high, right? That's 7,000 is all-time high. So we have a very large gamma at 7,000. We have a very large gamma at 6,000, and we are trading more. We gave up more than 50% of that gain, right? So as long as we are below 65, 600, I would be either market neutral or bearish, slightly bearish in the market, but also have long positions because market could move very quickly. Any questions? How do we help on Tradespoon? So we have tools to help you navigate current volatility. Stock Forecast Toolbox is my favorite product, favorite model. We've developed it. It's been developed for the past 20 years with enhancements, improvements. But the idea, it basically tells you, here's our bias or market bias. Bias is negative to the downside, right? And potentially we could get to the 629, 630 level in the next 2 weeks. Okay, so very useful information. Then you can zoom out to 6 months, right? You can do this on spiders, you can do this on QQQ, right? Any stocks or ETFs. Basically says neutral, right? The model is neutral, long-term trend, still intact. At 694, this was updated once a month on the first month. 694, you potentially want to trim your position, raise cash. At 626, you probably want to start thinking about going long and the market is oversold. So this is the main model that helps you navigate the current market volatility. You can, today's signals in active trader were Cisco and Murphy Oil. Murphy Oil goes in the right direction. Cisco actually have a sharp pullback today, but still in a strong uptrend. Right, Cisco has been a strong uptrend, outperforming majority of technology stocks. But you wait 15 minutes, and if it's stable and you want to buy technology, maybe Cisco is a better choice than Meta or Microsoft. So that's active trader. It gives you target gain, stop losses. You can enter them, your stocks that you watch in your watch list, create your own watch list. It will tell you predicted low, predicted high, what is our time horizon on Cisco in the next 10 days, in the next couple months. Right? We think by June it could be a $90 stock. So if you think at some point market is oversold, then maybe it makes sense to buy Cisco, right? Long term or short term. So that's stock forecast toolbox. That's active trader, right? We also have active trader gets updated once every day, right? So if you look at the history, every day there is some signals. Yesterday there was a signal on Diamondback, right? So yesterday, if you market opens and you buy Diamondback Energy, very strong move in the upside, continues to grow higher. Yesterday, today, still upward momentum. The idea is to buy half of the position, entry one, half the position, entry two. You can use it either yesterday's close, 196, or a predicted low 192. Right? If it gaps up, right? Yesterday it gapped up. Depends on your trading plan. You can either wait for retracement back, which in this case never happened, or you wait 5 to 15 minutes. That's usually I wait 15 minutes and then you buy, right? And if you did, then it would went from 200 to 203. So that's active trader. Also weekly trader. Every week model. This happens every week. On Monday, basically model says buy CF, right? Buy Occidental Petroleum and buy HRB, right? Interesting, all stocks are actually doing well. So energy makes sense, HRB makes less sense, but nonetheless, these are weekly signals. Notice target gain and stop loss is about, here is weekly trader 2.5%. Stop loss on active trader is 1%. And we'd also have monthly trader, right? So monthly trader, weekly trader gets updated on Sunday. These are longer term models. They run on the weekend and give you potential long-term movements in stocks, bullish and bearish. Active trader every day. And then we have Elite Circle where I actually trade stock and options. Right? So you can see this week, I got into QQQ put spread. I've been trading QQQ. Again, I think market is going to continue going lower. Bought QQQ put spread 565, 545 was the idea that there's more room to the downside. Also been trading around SH. I have a SH stock position. So you can see different ways to hedge your portfolio, either QQQ or SH. What else did I trade last 7 days? Energy, right? I had call spread on EQT. So you have a combination of stock and option trades in Elite Circle. We do have a relationship with Avantgarde. If you've been in live trading room or webinar, you can see we have marketing relationship and Avantgarde. And we actually do have, if you're busy and you don't have time to trade these positions, or you want a broker to execute these trades on your behalf, Avantgarde and Yellow Tunnel does offer full letter of direction capabilities where hedges like QQQ or EQT, you could auto execute if you open up account, on Yellow Tunnel and Avantgarde or Tradespoon, right? But you have to have a funded account at Avantgarde. You have to have a subscription, either Tradespoon and Yellow Tunnel, and you'll be able to auto execute these trades. Something to keep in mind. So I'm going to drop the link here where you can look at the offer and sign up if you're interested. And I'm also going to put it inside of the questions. All right, any questions so far on auto execute model? services. Okay. This is a lot of trading in Elite Circle. If you want just the spread service or premium spread service, this week we had EQT, right? So you can, the idea is that you can buy a spread, 63, 68 call spread, right? That expires March. You can buy 63 call, or you can buy a stock, right? Or buy a merit put. So that's premium service. It gets published every Sunday, right? And you get SMS message, you get text message, emails every time I trade, right? When I get in the position and get out of the position, right? So every time you get a fill, you will get notifications. But then you have to manage them yourself. So that's premium service. If you just want stock trades, we have Robo Investor. This is purely just stock trading. And also you have access to live trading room, right? So it's divided by signals that you have to make decisions on your own which signals to take, when to enter them. We have live portfolio, stock or option and spreads, or just spreads that you can access, right? And then we have a free content. We have Learning Center, where we give you a trading plan. We give you different guidelines. We have a lot of webinar recordings. If you want to learn about stock, option trading, technical analysis, portfolio management, all of that could be found here. So, if you have time to, if you want to manage your trades yourself, I would consider Elite Circle. If you want to have access to my portfolio and what Keith and I are trading, then I would consider either Premium or Elite Circle. If you just want signals, I would consider Tools membership, where you can get Stock Forecast Toolbox and our daily and weekly picks. And if you wanted free content, I encourage you to open up an account at Tradespoon. You get free education. And then if you don't have time, or you're concerned about current market volatility, you want to follow the signals when I trade, you trade, then consider opening up an account in Vanguard and auto-execute these trades. That's all I have for today. Thank you very much, and have a great day. Any other questions? All right, if there's no other questions, then that's all I have for today. Thank you very much, and have a great day.